Hi there, this is Chris from MoneyHub, and this video looks at how to pay off credit card debt with an average salary. So many people have written to us about credit card debt, and they've always said seems to be very consistent. I've got a huge debt and I make the minimum repayments. I can never seem to clear it. And this is a problem throughout New Zealand because interest rates on credit cards are very high. They're usually around 20 to 25%. And then the balances are high. They can be $5,000 or $10,000, and so basically what this means, people pay $1,200 after tax per year on interest, up to $3,000 of interest after tax. So that's really around an extra $5,000 or like $4,500 of your salary just being spent on the interest payments, which is absolutely mad. And this is the situation that a lot of Kiwis are in. And there's not a lot that the banks are interested in changing that because it's very profitable for them, and we just see the after effects of just a whole bunch of pain, a whole bunch of frustration, and a whole bunch of wasted money. So we want to get people out of this, and we've put together this guide to really explain how to do it. It's not complicated. You just have to have control, and you just have to have willpower to follow it through, and then you can get there. So without further ado, I'm just going to explain the guide. And we're very negative on credit card debt, and we think it's an absolute rip-off. There is an article that I wrote in Stuff for their column on money, and this really talks about how much we actually spend on credit card debt. It's about $1.6 million per day. That has actually since risen since 2021. And it just shows no sign of decreasing whatsoever because people keep missing payments, people keep taking out new credit cards, and we're just very, very negative on this. So that's a summary of our guide. Sorry, that's a summary of the article, but I would have a read of that as well if you are on the guide. And we've also linked down below to the Stuff article to have a read of. Now, let's just go straight into the details, because what happens is that it's much easier to explain this problem and how to actually pay off a credit card when you have numbers to kind of compare and work with. So back in 2022, when we last updated this research for these things, the average salary was around $56,000. We've kept that because we don't think we're going to change that too much. It's not really that relevant. We just wanted to show this for an example. That means the after tax is around $3,800 per month per PAYE calculator. And then if you actually work backwards from that, if you have like a credit card debt of say $5,000 and you want to repay it over 12 months, then you're going to have to average around $400 per month and put that straight on the card. And this is the problem because it's a high interest rate. Sorry, it's a high amount of your after tax earning, so it's around 11% just to pay off a $5,000 balance, which is quite large, but it's very expensive to do as a percentage of your salary once all your bills are paid and everything else. So $417 works out to around $14 per day, and this is the actual cash money that you need to put aside or save to be able to clear this balance of $5,000. So with that being said, there are ways to do it. We've talked about, and this is just in a summary here, not paying for lunch, missing some coffees, not taking the Uber Eats, all sort of things like that. It sounds basic, it sounds very kind of cliche, but these savings can add up significantly. And we really want people just to clear off this credit card debt because we absolutely can't stand it. And so we know that it's hard, to change the way that you live. We know that it's some things are absolutely that you can't cut back on, like rent, mortgage, power, broadband, basic food, transport, etc., etc. But we do believe there are some opportunities, which is why we've put this guide together to kind of explain it and the process that you can work through to sort of work out exactly what credit card debt you owe and how much it's going to cost to repay, and then work from there. So we do suggest a budgeting app, which I'll get to in a minute, that will help you kind of put things together and just track everything. because paying off credit card debt really comes down to just making the effort to actually follow through, and having the willpower, and having the full awareness of what you're paying, and seeing it go down is a really, really good feeling. And that's what we want to get people to do by publishing this guide. So people ask, should I get a debt consolidation loan to help repay the credit card debt? My view on that personally is that probably not. That's not financial advice. That's just, we sometimes, and actually in many cases, the solution to debt is not taking out new debt. It's working on that debt, paying it back, changing habits, because debt consolidation loans just cost money, and there's a new loan application fee, and there's interest to be paid, and it just gets expensive. So we're very kind of not sure about that. For most people would say not thinking that's the way to go, but we wanted to answer that question with some information just up the front. So because that is what people often think. They think, wow, if I don't qualify for a balance transfer credit card, should I do the debt consolidation loan? But our view is that no, I think for most people, let's just cut down on things, change habits, and then work through repaying those debts. And so that's what we've said in the kind of sort of introduction. Now, the 5 essential steps to paying off credit card debt, it's really, really important to follow them from 1 to 5, because you can't really cherry pick them. They're all related, and they all make it much easier to do if you follow them in sequential order. So, for example, if someone has a $10,000 credit card debt, it's likely to be costing $2,000 to $2,500 in interest, just in fees per year alone. That's without making any repayments. That's just what's being incurred naturally if you're making minimum repayments, and just kind of leaving it there. So these interest costs are going to add up, and this is why people get stuck in this cycle. So we believe that if you can, a first step would be to go to a balance transfer credit card. We've got a very comprehensive guide on this, and it covers a lot of information you need to know. We've got videos on them. We've got explaining all the terms and the fine print, but some people obviously can't get approved for them. The banks are quite choosy about who actually gets one, because for them it's quite a risk to take. But we wanted to suggest to people, first up, if you do have a balance to pay off, and it's sitting there and it's just charging you interest every month and it just never goes away, then a balance transfer credit card is a great idea to get, as long as you pay off the debt. Because some people take a balance transfer credit card and then it just does not work, because they take on new debt, they clear the balance from the card and then start spending once again, and so they end up with 2 balances to pay off, and it's an absolute nightmare. So the first step really is to get full control of your financial details and full awareness, and follow that up with some budgeting tracking. So first of all, you're going to have to get your bank balance listed, so what it is right now, and then work out what your after-tax income is per month, and then what you spend on the essential living cost, which is your rent or your mortgage. And these are your essential costs. You always need somewhere to live, and of course your after-tax income is what you get paid, and your bank balance is what you have now. And then what we suggest people do is get really familiar with their credit card debt. So don't shy away from this. Don't not want to know the answers or anything like that. A lot of people do. Please just go in, find out what the interest rate is for your credit card, find out what the balance is, and then look at all your other interest earning debt. This could be, it would be interest charging debt, and that could be store cards, that could be another credit card, things like that. You've just got to get a full oversight. So link what the balance is, write what the balance is, and write what the interest rate is, and then just get a full understanding from there, because then you'll be able to work out exactly what your debts are costing you, and then how much you need to save and how much you need to put away to be able to get these debts paid off. Now lastly, we suggest that you look at your ongoing expenses, and this will be your car expenses, like your insurance expenses, finance repayments, so for a car loan for example, and a phone plan. And don't look at your general things like food, clothing, and all of that stuff, because that's going to be adjusted while you repay the debt. So once you know what these numbers are, then we strongly suggest to get a budget app, and we shortlist My Budget Pal, but there's also Pocketsmith, which is like a paid. But you want something that you're comfortable with, that you find quite useful, and what you need to do is work out exactly how much you can repay or actually need to repay per month. So work through with the app, become familiar with your direct debits and know what bills that you have due, and then you can work out exactly what this is all costing you and kind of put together a essentials budget, and that's going to cover your debt repayments which need to be made as an essential. It's not like the priority really isn't to adjust your clothing expenses or anything like that. It really is to get totally familiar with what's going on with your debt repayments. So once you have that, you'll have a bit of a roadmap, so you can understand what money's due when, or what bills are due when, and this is going to give you more confidence to manage it. It's not going to be easy. It's not certainly like that's not it. You do now have to make sacrifices and cutbacks, but it's a good start just to get the budget app running and to get a full schedule of all your debts and basically exactly what you need to repay. Secondly comes the obvious. It's cutting down on monthly expenses, and this is something which unfortunately needs to be done, and it needs to be done permanently, because it's all too easy to just keep costs going, but you're never going to repay credit card debt without these significant sort of changes to your lifestyle. They're not significant in the fact that they create any hardship or any sort of difficulty. It's just you need to cut back on the things which cost money. TV subscription costs, individually they're quite small, but that's one that we've listed because a lot of people have many of them, and it's actually looking at subscription costs overall. Just go through your bank statement and highlight things that you think, I can get rid of this. This is not something that I need, because that is direct money that's saved, and that's money that can go straight into paying off your credit card debt. So if you don't need about $30 or $40 worth of subscriptions per month, then you could save that and put it straight out into the credit card, and then your balance is going to go down. It doesn't sound like a lot, around $400, $500 per year, but if you find other savings like that, which you will, then eventually it starts to snowball and you can get these things paid off. Someone's written in and they've said they had these subscriptions, in this case Amazon Prime and Sky Movies, but they weren't using them, but they kind of become quite lethargic and don't cancel. And once you cancel, you never miss it. And like we've got free streaming resources on MoneyHub, and to be honest, people just save significant amounts. We also suggest to people to reshop their phone plan. So many plans are a big rip-off in New Zealand, and you don't need to pay what they charge. People pay over $100 a month, which we think is not good value for money. So it's really about keeping your number, of course, not making any sacrifices there or any inconveniences, but really look at what you're spending and what you actually need, and then bring that down. If you can save $30, $40 per month, once again, more money to pay off credit card, less money going on a credit card, and just overall good financial decision making. So that is something that we really suggest people do. And at the same time, we think it's really important to look at repricing your insurance, especially after the cyclones have come into play. And unfortunately, with natural disasters, a whole bunch of risk-based pricing is now going on. So insurance is going up. And unfortunately, people will be getting higher bills throughout 2023, 2024, and 2025, like and onwards from there. So with that being said, there are immediate savings to be had for just comparing the market. And car insurance usually costs people $600, $500 to $1,200 or so per year. People can save on that. Home insurance, same thing. You know, you can definitely shop around there. And then also contents insurance. The worst thing is if you don't find it any cheaper, that's okay. At least you've compared the market, but it doesn't take long to do. Everything's online, and you've just really got to make a concerted effort, because if you can save $50 to $100 per month on your insurances, that, you know, that is going to pay off a credit card a lot quicker than just keeping the same insurance going. And of course, you know, all these costs add up, or all these savings add up. So moving there, it's looking at now at a payoff plan. And so whilst you're kind of gathering savings to make and looking at the ways to you know, cut back on things, we do suggest at the same time as you're paying off your credit card debt is to put together a small emergency fund. And the reason is because people rely on their credit cards so quickly when they desperately need money, and that just creates a big debt trap later on, because, you know, okay, we didn't have money, now you've used your credit card, that money has to be paid off, and it's costing, you know, 15, 20, 25% per year in interest. So what we suggest is people just make a small contribution, maybe $20 per week, to some sort of emergency fund. We've got a specialist guide to that, which we suggest having a read of, and then you can get an understanding of, you know, how that works, what you can use it for, what you should never use your emergency fund for, because it's not really a, oh, there's going to be a wedding going on, I need to have some money for that. It's more of a total emergency, not use credit card, and just some good habit forming, really. And we also suggest that people look at creating a budget and work out what they want to repay, you know, overall. So if you want to, say you've got a $5,000 debt and your target is to pay it off over 12 months, that is it. I mean, that is ambitious, of course, but it's good to certainly be, you know, out there trying to do it. And what we suggest people is just work out the numbers. So if it's going to be $5,000 and you're paying it over 12 months, that's 5,000 divided by 12. It's around 400 and something. And that will give you something to target. Now, even if you cut back on subscriptions, cut back on insurance costs, and just lower, you know, takeaways and all that stuff, and you may save $250, that's still great. That's still $3,000 per year. And those savings definitely add up. So it really is about just challenging the status quo and just making the sacrifices, knowing that it's really going to help you long term. And then controlling your spending is really, really important. So that we know that consistently paying off, say, 1/12 of your debt or 1/10 of your debt per month is not always going to be realistic, and that's fine. But we want people just to, you know, make some sacrifices, and also at the same time be happy, because it's like, it's not that much fun to, you know, have to face this fact, but we don't want people to be all miserable and living, you know, very, very poor or very, very cheaply over the next 12, 24 months, however long it takes to repay. We just want them to, you know, also balance that with fun and, you know, enjoy themselves. So what we've suggested, rather than going out all the time and spending money on subscriptions and then, you know, like using phones for like purchasing and, you know, paid outdoor stuff, really just invite friends around for dinner and drinks sort of thing, pretty casual. And then free TV streaming is obviously free, and there's so many options. And also board games or local nature stuff. There's so many great things in New Zealand that you don't need to pay for entertainment, especially if you're trying to clear down large credit card balances. So with that in mind, there's no need to, you know, delay repaying as soon as you can get into it. it really is going to just be the best possible start. So we suggest that people cut down their costs, change their everyday spending, and just get the focus being the repayment. If that means having to cut up the card, that's a great idea, because that's just going to eliminate any temptation or any new debt coming on. It's very hard to pay off credit card debt when you've got a large balance that keeps growing. Sometimes it goes down, it grows up again. Very, very hard to manage, and not really in your interest in the short or the long term, because of the amount of interest that you'll pay. And then so at the beginning you're very serious about it, and then in the middle you just have to keep on making the debt repayment milestones, and you keep going there, and sometimes it'll drop off, sometimes you'll have an emergency, sometimes you've got other costs, but you just need to consistently keep repaying. And then finally it will happen, you'll make your last repayment, and that shows self-control and it shows willingness, and it will be a bit of a sacrifice, it will be a bit of a struggle sometime just to keep to it, but these the feeling of being debt-free, especially credit card debt-free, is completely unrivaled when you've been stuck in it for some time. So strongly can't sort of underrate those feelings, because people just, it's completely life-changing for many New Zealanders. So the aftermath, once you are debt-free and you've made the sacrifices and you've cut down the costs and you've made sure to always pay those monthly balances and bring it down and down and down, is that credit card should be very rarely, sort of sparingly used. And we don't suggest people take on new cards, because it's too easy to fall into this trap of credit card debt balloons, and that there's so much money in it for the banks to give people credit cards. I mean, the right people that grow the balance and then sit on it for ages and keep repaying, it's too lucrative to banks, so we're not keen on that at all. And then what we do know is that when people have all their credit card debt paid off, that there's no debt left, and you've got spare money because it's not being absorbed in interest costs. You can actually do things you want to do, and you're not wasting $1 on this nonsense interest rates and these expensive repayments. Some credit card companies and banks will offer you some sort of deal, because they know that you have got into credit card debt before, and these are really, and this isn't too negative, but they are largely designed to keep you paying interest. That's where credit card companies and banks make a lot of their money, not so much from the 1.5% or 0.6% charge or whatever it is that they charge the merchants. It's from borrowing at 5, 6, 7% and relending it to their credit card payment customers at 20-25%. That's where they make their money, and it's horrific. So the aftermath is going to be some ups and downs, because you may be incurring more costs later. Something may come up, but as we say, please avoid credit cards, and then you will get this complete sense of freedom, which is completely undervalued, as I said, and something that really is it's totally worth the constant payments to be able to get to that situation. So we've listed some frequently asked questions, largely about KiwiSaver and what app is best, and then if I get a windfall, what should I do? That's not really for me to answer in these specific things, so we've just left some frequently asked questions for you to kind of just have a read through. But if you do have any questions, please do let us know, because we're very responsive on any questions asked, and we like to update our guides to make sure as they're as comprehensive as possible. And certainly with large money being owed by credit card customers, this is something that we're going to put more resources into. We're going to share more information. So if you do have any tips or any insights or any questions, please let us know, because we want to make this as widely useful as possible within New Zealand, just because of the tremendous costs which are being incurred from interest rate charges. So thank you very much for watching. If you do have any questions, please, we're very responsive. Thank you so much.